Assalamualaikum everyone. Today our group will be present the title of Accounting and Sharia Compliance Practice in Islamic Financial Institution, a case analysis of Islamic financial zakat accounting and Sharia governance based on case study that have been provided. Next, I will be introduce my group member. First is Syed Abdul Aziz. Second is Min Hazira. Third is Daniel Afiq. Next is Saidatul Nisa Farhanim, Muhammad Ehsan, and the last one is Muhammad Daniel.
Assalamualaikum and good day everyone. I will be present the executive summary of our report on Barakah Islamic Bank Berhad or BIBB. This report focuses on evaluating the accounting and Sharia compliant practice implemented by BIBB as an Islamic financial institution in Malaysia. The bank offers several Islamic financing products, namely Mudharabah, Musyarakah, Murabahah, and Ijarah financing, which must comply with both Islamic accounting principle and Sharia requirement. Our analysis examines whether the accounting treatment used by the bank accurately reflects of the nature of Islamic financial transaction. In addition, we assess the application of zakat accounting, the role of Sharia governance, and the effectiveness of the bank internal monitoring mechanism. Overall, the findings indicate the BIBB demonstrate a strong commitment toward Sharia compliance through proper governance structure and adoption of Islamic accounting standard. However, continuous improvement are necessary to enhance transparency, accountability, and stakeholder confidence. Moving on the background of Barakah Islamic Bank Berhad. Barakah Islamic Bank Berhad is a rapidly growing Islamic financial institution operating in Malaysia. The bank provides a wide range of Sharia compliant financial service designed to meet the needs of both individual and corporate customer. Among the product offered are Mudharabah financing, which is based on profit sharing, Musyarakah financing, which is based on partnership, Murabahah financing, which involve cost plus sale transaction, and Ijarah financing, which is based on leasing contract. As the demand for Islamic banking continues to increase, BIBB has expanded its operation significantly. This growth requires the bank to ensure that every transaction is recorded and reported according to Islamic accounting principle, while maintaining full compliance with Sharia requirement. To achieve this objective, the bank has established several governance mechanisms, including the Sharia Supervisor Board, Internal Sharia Review Unit, and Audit and Governance Committee. These bodies play a critical role in monitoring the bank operation and ensuring compliance with AAOIFI standard and the Sharia governance framework issued by Bank Negara Malaysia.
Next, we move to the definition of Islamic accounting. Islamic accounting is the process of recording, classifying, and reporting financial transactions in accordance with Sharia principle. It ensures that all business activity complete with guidance from the Quran and Sunnah. Unlike conventional accounting, which focuses mainly on profit, Islamic accounting also emphasizes ethical values, social responsibility, and accountability to Allah Subhanahu wa Taala. It ensures transparency, fairness, and justice in managed resources for the benefit of society. Lastly, for Barakah Islamic Bank Berhad, Islamic accounting is important as it supports Sharia compliant products such as Mudharabah, Musyarakah, Murabahah, and Ijarah, ensuring all transactions follow Islamic principle. Next, we move to the objectives of Islamic accounting. The main objective of Islamic accounting have 5. First is ensuring Sharia compliant. Islamic accounting ensures that all financial activity are free from prohibited elements such as riba, interest, gharar, and marche. For BIBB, this objective is achieved through monitoring by the Sharia Supervisor Board and Internal Sharia Review Unit. 2 is promoting accountability, which is amanah. Islamic accounting promote accountability to Allah Subhanahu Wa Taala and society by ensuring that management properly manage extracted resources and report financial information truthfully. 3 is providing transparent financial information. Stakeholders require reliable information to evaluate the bank's performance. Accurate reporting enhances trust among customers, investors, and regulators. 4 is facilitating fair wealth distribution. Islamic accounting supports social justice through proper calculation of zakat and fair profit sharing agreement under Islamic financial contract. The last one is supporting decision making. It provides useful information for management, investor, regulator, and customer in making informed economic decision while maintaining Sharia compliance. Next is we move to the importance of Islamic accounting standard. Islamic accounting standard provide guideline for the recognition, measurement, presentation, and disclose of Islamic financial transaction. This important of this standard include have 5. First is ensuring uniformity. Standards ensure consistency in accounting practices among Islamic financial institutions. 2 is ensure Sharia compliance. They provide guidance for recording Islamic contract according to Sharia principle. 3 is improving financial reporting quality. Standardized reporting increase the reliability, transparency, and comparability of financial statements. 4 is increasing stakeholder confidence. Customer, investors, and regulators gain confidence that Islamic financial transactions are properly reported. And the last one is supporting regulatory compliance. In the case of BIBB, compliance with standard issued by the Accounting and Auditing Organisation for Islamic Financial Institution and the Bank Negara Malaysia Syariah Government's framework help ensure proper governance and accountability. Next, I will explain the comparison between Islamic accounting and conventional accounting. Islamic accounting is based on Sharia principle from the Quran and Sunnah, while conventional accounting is based on secular accounting principle. The main objective of Islamic accounting is to achieve accountability to Allah and society. In contrast, conventional accounting focus on maximizing profit for stakeholders. Islamic accounting prohibit interest or riba, while conventional accounting allow interest. Islamic accounting also emphasizes ethics, social responsibility, and zakat. On the right side, there are the qualities of Islamic accounting information. The information must be reliable, relevant, and accurate. It should provide a true representation of financial transaction. The information should also be comparable across different periods and easy for user to understand. In conclusion, Islamic accounting focus not only on profit but also on ethics, fairness, and Sharia compliance. Qualities of Islamic accounting information. Islamic accounting information should possess the following qualities. First is reliability. Information must be accurate, verifiable, and free from material errors. 2 is relevance. Information should assist user in making economic and Sharia-related decisions. 3 is faithful representation. Financial reports must honestly reflect the true nature of transaction. 4 is comparability. Users should be able to compare financial information across different periods and institutions. The last one is understandability. Reports should be presented clearly and comprehensively for stakeholders.
Next, I will discuss Mudarabah financing, one of the key Islamic financing instruments. Mudarabah is a profit-sharing contract where one party, known as the Rob al-Mal, provide the capital, while the other party, called the Mudarib, manages the business. Profit are shared according to a pre-agreed ratio, while loss are borne by the capital provider unless they result from negligence or misconduct by the entrepreneur. In the case of Barakah Islamic Bank Berhad, the 50 million Mudarabah financing represent fund invested in Sharia compliant business ventures managed by customer or business partners. The main Sharia principles include profit sharing, loss bearing, prohibition of riba or interest, risk sharing, and ensuring that all business activities are halal and Sharia compliant. From an accounting perspective, Mudarabah financing is treated as an investment rather than a loan under AAOIFI standard. The accounting process begins with initial recognition of the investment. Subsequently, the investment is measured at its carrying amount. Profit are recognized when realized, and loss are recognized according to the agreed Mudarabah agreement. However, Mudarabah financing exposes the bank to several risks, including credit risk, operational risk, agency risk, liquidity risk, and Sharia non-compliant risk. To ensure proper accounting and Sharia compliance, the transaction is guided by AAOIFI Sharia Standard Number 13 on Mudarabah, FAS Number 3 on Mudarabah financing, and the AAOIFI conceptual framework for financial reporting. Next, moving on to Musyarakah financing. Musyarakah is a partnership contract where two or more parties contribute capital to a business venture. Profit are shared based on an agreed ratio, while loss are shared according to each partner capital contribution. Unlike Mudarabah, all partners may participate in the management and decision-making process. This financing structure is commonly used for project financing, property development, and business expansion. The main Sharia principle of Musyarakah include joint, partnership, or shirkah, profit sharing agreement, loss sharing based on capital contribution, risk and reward sharing, and the prohibition of riba and gharar. In terms of accounting treatment, Musyarakah financing follows similar stages, including initial recognition, subsequent measurement, profit recognition, and loss recognition. Several risks are associated with Musyarakah financing. These include business risk, partner risk, capital impairment risk, liquidity risk, and Sharia compliance risk. The relevant AAOIFI standard are Sharia Standard Number 20 on Syarikah, Musyarakah and Modern Corporation, FAS Number 4 on Musyarakah financing, as well as AAOIFI governance standard relating to Sharia compliance. Overall, Musyarakah promote partnership, share responsibility, and equitable distribution of profit and risk among all parties involved.
Murabahah is a cost-plus financing method in Islamic banking. The bank buys an asset and sells it to the customer at a markup price. That's markup is profit, not interest, so it's fully Sharia compliant. Key principles: no riba, the bank must own the asset first. Everything is transparent, and the asset must be halal. For accounting, we record it as inventory first, then as a receivable. Profit is recognized at sale or deferred over time. We follow FAS 2 for impairment. Risks include customer default, asset damage, market decline, and Sharia non-compliant. Ijarah financing. Ijarah is a Sharia compliant lease. The bank owns the asset and rents it to the customer. The bank keeps ownership and bears all ownership risks. Two types: pure Ijarah, no transfer at the end, IMB, ownership transfer at the end. Accounting, asset stays on the bank's balance sheet. Rental income is recognized over time. For IMB, final payment is a nominal price or hibah. Risks include payment, default, asset value drop, obsolescence, and regulatory change.
In this part, I will explain the calculation of net zakatable asset for Barakah Islamic Bank Berhad. First, we calculate the total current asset. The cash and bank balance is 25 million ringgit. Receivable are 30 million ringgit. Inventory is 15 million ringgit. Investment are 20 million ringgit. So, the total current asset are 90 million ringgit. Next, we deducted the current liability, which are 20 million ringgit. To calculate the zakatable asset, we ask this formula. The zakatable asset equal total current asset minus current liabilities. Therefore, 90 million ringgit minus 20 million ringgit equals 70 million ringgit. This means the net zakatable asset of Barakah Islamic Bank Berhad 70 million ringgit.
Now I will explain the importance of zakat accounting in Islamic financial institution or IFIS. Firstly, zakat accounting ensure compliance with Sharia requirement by making sure zakat is calculated and distributed according to Islamic principle. Secondly, it promotes accountability and transparency. A stakeholder can clearly understand how zakat obligations are determined and managed. It also facilitates fair and accurate zakat calculation, ensuring that the correct amount of zakat is paid based on the institution's illegal asset and liabilities. In addition, zakat accounting supports social welfare and wealth redistribution by channeling funds to eligible beneficiaries and helping reduce economic inequality. Proper zakat accounting exchange public trust and strengthen the reputation of Islamic financial institution as responsible and ethical organization. Furthermore, it assists institutions in meeting regulatory and financial reporting requirements, ensuring compliance with relevant standards and guidelines. Finally, zakat accounting reflects the objective of Maqasid al-Sharia, which aim to promote justice, social well-being, and the welfare of society. Therefore, zakat accounting play a crucial role in ensuring both Sharia compliance and social responsibility within Islamic financial institutions.
Next, I will discuss the accounting standard between zakat and zakat in Islamic financial institutions. Zakat and zakat is not only a religious obligation, but also an important element of financial accountability in Islamic institutions. Fundamentally, therefore, Islamic financial institutions must follow organized accounting standard to ensure that zakat is calculated and reported accurately. One of the most widely accepted in contrast standard is a legal obligation financial accounting standard number 9 to generate revenue for public address zakat. Secondly, zakat is generally provide guideline on the recognition of 2.5% calculation eligible wealth and disclosure of zakat obligation and how under the standardization, however, must identify zakatable asset and government eligible income level before determining the amount of zakat payable. The standard also require disclosure of the zakat calculation, category and the amount mentioned in financial statement, such as the poor, needy, the application of the standard tax revenue. On the other hand, and may be used for various government expenditure, including education, health care, infrastructure, Islamic financial, national development. In conclusion, zakat serves both while maintaining public confidence, socio-economic purpose. Next, I will discuss the accounting standards relating to zakat in Islamic financial taxation. Zakat is not only a religious obligation, but also an important element of financial accountability function in Islamic. This distinction, therefore, Islamic financial unique role follow recognized within Islamic economic system. Zakat is calculated and reported.
Okay, next is for key findings. Our study found that Barakah Islamic Bank Berhad applies Islamic accounting principle effectively by ensuring transparency, accountability and compliance with Sharia. This helps build trust among stakeholders. The bank offers four main Islamic financing products, which is Mudarabah, Musyarakah, Murabahah and Ijarah. Among these, Murabahah financing has the highest amount at RM120 million, showing it is the bank's most widely used in financing product. For zakat accounting, we calculate the bank's zakat payable to be 1.75 million based on its net zakatable asset. This reflects the bank's commitment to fulfilling its religious and social responsibilities. Lastly, the bank has a strong Sharia governance framework, including a Sharia supervisory board and internal review processes to ensure all operations comply with Islamic principle. Okay, next for recommendation. Based on our finding, we have several recommendations. First, the bank should continue improving its Islamic accounting practices and ensure compliance with AAOIFI and Sharia standard. Second, regular training should be provided to staff to keep them updated on Islamic finance development. Third, the bank should strengthen its Sharia audit and improve zakat reporting for greater transparency. Finally, adopting advanced technology can improve efficiency and support better compliance.